Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you in this episode is how you can trade the big stocks, the big companies for cheap or just with a lot less risk. So stay tuned. I'm going to answer and show you this in this video. All right, so in this segment, we're going to really talk about butterfly spreads and dealing with options. How do we use options to go ahead and trade some of the bigger companies? Maybe you don't have a lot of cash. Maybe you don't want to put up a lot of cash. Maybe you just want to trade something a little safer. Now, yes, options can be dangerous if you don't understand what you're doing. I'm going to show you the risk profile picture to this so that way you understand what's going on and what's happening. Now, the reason we're talking about this is because we have an upcoming course. It's the Options Mastery Butterfly Spreads course series. So you can go to our website, learn.com, and then once you're there, go ahead and check it out, and then you can go ahead and get the course. Once you're signed up, you'll get access to the full course. Now, if you're getting this during the pre-launch segment, we're breaking the course up in sections. So part 1 is released August 31st. Part 2 released September 7th, which the part 1 is basically a foundation, a good foundation floor plan to how to build out a butterfly. How does it kind of work? The differences between a butterfly spread and a calendar. With part 2, we're getting into kind of the Greeks. Part 3, we're getting into planning things out, adjustments. Part 4 and 5 are all strategy ideas. So anyways, that's kind of the bigger picture of the course, and it is detailed. It is right now about 24 hours long and 65 modules. So how do we go ahead and create these butterfly spreads for cheap if, let's say, a stock is big and maybe you just don't want to put up a lot of cash or capital? All right, so to kick things off, let me go ahead and take a look at a big company like Tesla. So let's say you want to bet on this stock, and this stock's been exploding to the upside. You don't know where it's going to go. Let's say it's going to go to the upside or the downside. Whichever direction you choose, I'm going to show you how you can set up a butterfly spreads and kind of the power behind butterfly spreads. So what I will do, and don't worry too much about the construction of it, we cover many more things like this in the course about really breaking it down. But I just want to show you the problem that many people have. If I was to go ahead and buy this stock, and let me just go ahead and analyze this stock right here. And for you to go ahead and purchase this stock, if you get 100 shares, okay, and you multiply it times 2248, which is the current price, you're looking to pay up $224,000. That's quite a bit of money. So how do I make a directional bet on this using maybe less cash? Well, you could go trade less shares, that's one thing. But to go ahead and do another method is to go ahead and use butterflies. And butterflies are fairly cost effective. So let's say I go out 50 days out, and I'll go ahead and buy a butterfly spread. Maybe I think this stock's going to go to the upside. Go ahead and I'll buy a butterfly, analyze the trade, and just to show you how I might set this up. So let's say I go to 2,800, and this will be 2,900. So 50 points spread out one way or the other. Let's go to today. Let's see here what it looks like. Actually, this one I might need to even spread it out further. 2750, 2950, and there we go. So how much did it cost me to set up this butterfly spread? What's my risk? $520. How much money can I make? Well, the thing with this is very interesting is your delta is only 0.65. So normally when you buy 100 shares, stock goes up $1, you make $100 if you had 100 shares. And you can see that if I go ahead and let's say buy right here, analyze the trade, and I change this to 100 shares, my delta is basically 100. So if that stock goes up $1, I make $100. Now this stock has been going up $80, $100, $200 a day. So it does move quite quickly. In my case here, I'm not making a lot of money if it goes up. I'm just looking for a range of direction, but I'm also not going to lose a lot if it starts pulling back. So if it does continue to head higher, what's great about this is that if it starts moving up in my range or direction, this white line with time will get closer to this green line. So what you'll notice is that this theta decay right here, right now I'm actually down theta decay. But if this continues to move, here's my price slice. Okay, this works like this. Here's our stock price down here. Here's our profit or loss. Okay, the max we can lose is 500. So what this does is, based on this curvature of this white line, which is today, and the green line at expiration, this white line gets closer and closer to the green line. So your delta, or the amount you make, starts to increase as you keep climbing this ladder. So I want you to think about this for a minute. If you go ahead and buy the shares of Tesla, for you to make, let's say, 50% on your money, or, you know, for you to double your money in a way, you know, the stock's got to go up quite a bit. It's got to double up. But with the option side, it doesn't have to do that. So you can go ahead and make more on a percentage basis, right? We're talking about percent of return. When we look at a percent of return, watch what happens with time. So with time, if this stock continues to head higher and higher and higher, okay, that white line continues to move higher and higher as well. So it accelerates your profit potential. So it continues to move up. So I want you to think about it this way. Let's say it does go in that direction, and maybe it doesn't go as far. Let's say it goes to right here. So what would you make? You make $461 on how much risk? Okay, risk-wise, we're putting up 520. So 461 divided by 520, the amount of return is 88%. Okay, now if it keeps going higher, yeah, of course you can make 770 on 770 on 520. Okay, so you're getting 148% return on your investment. So it's pretty significant. Granted, I don't really expect this thing to hit my exact perfect strike right there at the tip, because the most money you can make from this trade is right there at the tip if it expires. But for you to do that, it's got to hit at the right time, at the right strike, at the right price, and that's just so difficult to call. So in our case, when we're doing these butterfly trades, you can put these on so cheap and cost effective that, hey, as long as it kind of goes up in that range, and, you know, it burns a little bit through time decay. Even if it doesn't, let's say it goes against you and it keeps moving against you, well, you're just going to lose your 146 bucks. But if you want to play the bigger stocks and you want to play it with a little bit less cash, this is a good way to do it. So that's one of the great things regarding this course, is that I'm going to show you how to put on these cheap trades and these strategies that with time, as these continue to move, boom, you can go ahead and capitalize and profit from them. Because you don't have to put up a lot of cash. Take a look at, let's just say, Boeing. Here's another example. Let's say you think this will continue to head higher. Let's say we do 22 days out, and I go over here and I do a Boeing trade. Here's a butterfly trade on Boeing, and let's go to 195. Let's go to 200 and here. So I can put this trade on. You're going to kind of laugh at this, how much this trade is going to cost me. Okay, so it's going to cost me about 25 bucks. Okay, I can put a directional bet on Boeing for $25. The most I can lose is $25, no matter where the stock price is. So if it goes down to 0 or goes all the way up, the most I can lose is 25. Now I could widen this out, okay, because I won't make that much either with a trade like that. So I could widen it to a 10 spread, and now I've got a trade on for about 88 bucks. You can see that right there, max risk, 88. You can see it right here, 88. I'm paying $88 for this trade. So what's the cool thing about this trade? Well, if I'm looking for an upside move, bullish, right here, it's moving, 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 and then it decays a little bit with time. Even if it goes here, well, look at it like this. If I make 60 bucks on 88, okay, percentage, right? 60 bucks on 88, you're still making 68%. Now, that stock's got to move for that to happen. That's the one downside. It's got to move up a little bit. But you can see with these butterflies, you know, people focus so much on that butterfly at expiration, but remember, it's the white line that counts, and I've got a lot of bleed or outside range beyond that expiration. Now, once you get closer to expiration, yeah, it forms more into that butterfly, and then you got to be in that range. But if it starts moving, 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 and you're kind of got that time decay working in your favor, even if you're outside that range, you can still be up $114 on a trade that cost you $88. Think about it, $114 on $88 of capital, that's 129% return. That's what makes these very attractive trades. Yes, they're a little more difficult to manage than maybe a single call or single put. But look, you could multiply it times 10 and now you're risking, $1,000 or 880. Let's go ahead and do about $1,000. And then as it moves up with a few days of time decay, you can make about $400 on $1,000. So that's kind of the power behind it. And also, of course, watching your risk, because if it does pull back, okay, you're only out like $350, rather than maybe putting up $20,000, $50,000, $100,000 on a stock. So anyways, my point is you can trade these very cost effectively, very cheap if you want to. You can do it to the upside, or let's just say, hey, I want to do Amazon, and let me go ahead and let's see. I might even have a butterfly on Amazon. Here's a butterfly on Amazon. This one, I put it on a while back. Anyway, point being is let's go ahead and hide the positions. Let's put on one. Let's say you're bearish on Amazon, and we'll go on Amazon, and you want to put a little bit of a bearish butterfly. Let's say you think it's going to move down a bit, or you're just trying to protect yourself. Buy a butterfly right here, analyze the trade, and let's say I go 32.50 and I go about 50 points down and 50 points up for my protection on my wings. So there's kind of my butterfly, and I could put a bet on this trade for $160. Think about it, $160 on Amazon. That's the most I can lose on this trade. Now, as it comes into that range, if I think it's going to pull back and then give it a little bit of time decay, look at that range. So I'm putting on a trade for 160, and as long as it's in this wide range, right here, it's in this wide range, I could be up about 193. So almost a 1-to-1 return. Now that's great. So of course it is directional. It's different than an iron condor. Could you put these on at the money? Yeah, absolutely. I'm just showing you how you could go ahead and do these directionally for a lot less money and taking cheap shots, cheap bets on strategy and position. So anyways, that's an idea and opinion for you, a little bit of a strategy where you could go ahead and do these very cost effective, and you can trade the big stocks. Even if you have a large account, sometimes you just don't want to put up a lot of capital on a directional bet. These are great for earnings in that way because they're so cheap to do. And that's what we cover in this course. So if you're interested in learning more about butterfly spreads, we're going to do that in our butterfly spreads course, options course. So go ahead and check this course out. It'll be on our website at LEARN. And if you go to our Traders Fly site, just go ahead and scroll just one block down, and you'll see that you can go ahead and grab this course, and these buttons will be changed at the time once this course is launched, because we're still a couple days away from that, but I'm pre-recording this video for you. So anyways, I just wanted to show you this course. If you're interested in getting it, you can also go ahead and get a discount that first kind of month during our launch, and even a $50 coupon for doing a testimonial and review from a previous purchase. So if you've purchased one of our other courses, go ahead and submit a video testimonial, and if it gets approved and accepted, we can give you another $50 coupon you can use for the Butterflies course purchase, or maybe another course there as well. So thank you so much for joining me. Hope you learned a little bit of something here in this video, and feel free to grab a few freebies that we have to download on our website, and subscribe to the YouTube channel if you're brand new. Thanks again, and I will see you next time.